Hi everyone, it's Alex here at Cestrin Capital Research. Welcome to our Inner Circle webinar. It's currently Monday the 4th of November, just after 4:15 Eastern for the benefit of the tape. Okay, so market doing nothing much, just reality suspended ahead of the election, I suspect. But I think it's worth going through a few things today. The thing that personally I'm looking a lot at is VIX versus what the S&P is doing versus what bond yields are doing versus what oil is doing, because it's not following any sort of normal relationship between them. So only great conclusion from that, but I think it's interesting to look and see what's happening there, and I'll explain as we go. Single name stocks, I think it's worth looking at some of the big names to tell us where the market might go, because where these names go, the market follows. So Nvidia, Microsoft, not Nvidia twice, in fact, Apple, Meta Platforms, and then also let's look at a couple of smaller but still important stocks, so Micron, ARM, and Intel. Look at two sectors, being semiconductor and energy. We can learn something about the market from there, and as always, we run this on a live open mic Q&A basis, so if you have questions, comments, points, anything at all, as always, great to shout them out or put them in Slack or however you want to get them across. Use the Q&A function or comments function in the webinar platform. But as I always say, these webinars are the better, the more comments and questions we have. Let's do our disclaimer. After that, I'll turn mics on and we will get going. So disclaimers on your screen right now. So disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in the webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in the webinar is intended to be investment advice, and nor should it be relied upon to make investment decisions. Cestrin Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Cestrin Capital Research. Cestrin Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, let's get mics on. Okay, so all mics are now on. Let's get started.
Hi, Alex. Sorry to interrupt so early. Just wanted to highlight Palantir just posted results. I didn't see the numbers. Stock is trading plus 14%, 1.4 aftermarket.
Yeah, if you look in, there's a quick comment in chat just now, but if you have a quick look at it, it's pushing, I would say, wow. Okay, so upside to 55, I would say, which is that 3.618 extension, downside to 30. So yeah, good. I also think, we'll come on to this later, but I think the fact that, I haven't seen the numbers, but it doesn't matter. The fact that you can get that kind of reaction, today is really bullish for the market overall, because it'd be if the market was positioned to drop right now, then you would expect, I think, Palantir to drop whatever the earnings were, because it's run up so much that if people wanted to take profits in general, particularly from the higher beta stocks, they'd be doing it. So I take that, I haven't seen the numbers, but I'd take that as a bullish sign for the market as a whole, to be honest. Okay, let's get back. So let's look at, start with the 10-year. Okay, the narrative, as everybody knows, is inflation isn't dead. The Fed cut too much too soon, and inflation is going to rear its head once more. That's the narrative, right? And the narrative says that the Fed might cut again, that if it does cut again, it's cutting into too strong an economy to cut, and that's storing up future inflation, again. And therefore, so goes the narrative, the Fed's going to have to hike sooner rather than later, which is setting the market up for a fall in 2025, goes the narrative. The 10-year isn't saying that, at least it's not saying it in the short term. What it's saying in the short term, I think, is that bond yields are about to come down, and therefore bond prices up. and I don't know about next year or the year after that, but just in this time frame here, which this chart starts on the 17th of September, which is around the time, I forget the exact date, but around the time rates were getting cut. And the response to the rate cut has been a rise in bond yields. In other words, bonds have sold off, and they've sold off because of that narrative, which is, here comes more inflation. Again, why do bonds fall with inflation? Because if you put a dollar into a bond, and if in 10 years you get that dollar back, and there's been heavy inflation along the way, then your dollar's worth less, and therefore you want more yield along the way to compensate for the loss in value in your principal, this being a fixed income instrument. Lower inflation, bonds do well. Higher inflation, bonds don't do well. But over this period of time, so this is, let me see, what, 6 weeks or so, 7 weeks, that looks like a topping pattern for the 10-year yield. And if we were to look at TLT as a proxy for government bonds, TLT, I think, this is an hourly chart, I think might have bottomed, which suggests you get this chart every day, but let's just zoom in a bit. So this is 17th of September high for TLT 101. It's put in a really big correction, an ABC correction down to trough of 90, and then right here, you can argue this two ways. You say, well, it's still making lower highs, kind of, and lower lows. That might be, but that gap there isn't nothing, and it might be that there is a 1 and a 2, a 50% retrace, a spike low, no more sellers, and a move up. So I think that near term, I think we might see a bond rally post-election, regardless of who wins. I'm not sure that who wins matters right now. I know Goldman Sachs say it does, but I'm not sure that that's true. I think what matters a lot is the degree of protection that investors have bought by way of puts. We can look at the VIX at the moment. And I think what matters more is the fact that in bonds, yields have just run up so much that I think we might see a short-term, at least, correction in the yield down, so TLT up. And I think if we look at the VIX, I'll just zoom out a little bit on this. Not that much. There we go. Here's the VIX. So this is the big spike on August the 5th. Yen-Mageddon drops back after that. And then you can see this gradual sort of running up into the election. And a sort of a ceiling in the 23, 24 sort of zip code. I could be wrong, but I think that the VIX is going to drop after the election. I think this is people buying protection by way of S&P 500 puts. And I think that those puts will expire in the money or be exercised or something else. But I think that the demand for puts is going to fall away after the election because we'll have certainty. Not necessarily tomorrow, it's probably going to take a little while to come to a conclusion about who won, but at some point there will be certainty. And I think that investors are insuring against uncertainty. I think the market can go up regardless of who wins. And so my primary thesis, and obviously I'm very prepared to be very wrong and do something different entirely, is I think we're due a move up. I think we're due a move up because I think yields are going to come down. I think that bonds are going to move up. I think that the VIX is going to drop. And I think that with demand for puts falling, I think the S&P is going to move up. And I think that if the S&P moves up, I think the NASDAQ and the Dow can move up. So this is the S&P here. It's the August the 5th low. The 1 up, a 2 down. I think we're in the middle of a wave 3 up. I think it's notable that despite, a bit of a drop since the middle of October high, it hasn't dropped below that wave one high there, that 564 level. I think the S&P can run to 605, 625 even during this cycle, and maybe we get sort of sideways range bound action for a while, for a few days, but I think it can move up. And if I think we look at the Nasdaq as well, the same is true. It's the same sort of chart for the Nasdaq as the S&P. So yeah, technically it's dropped a little bit below that wave one high, but not much. It's holding above it here, quite well. And I suspect the next few days might well just be sideways chop as people wait for certainty. I think that's a market that's poised to go up. I think these wave threes are going to continue up. And as I mentioned with Palantir, let's just get the extended hours on this for 1 second. To get that sort of earnings reaction, the day before a tightly contested election where, each side believes the other is going to end the world, I think that's a bullish sign. Again, I haven't seen the numbers, doesn't matter what the numbers are, but I think that's a bullish sign. Let's just finally look at oil. This is also strange. So what again, narrative, right? Inflation's going to go up. If inflation's rising, then very often oil will be rising. Either rising oil is the cause of inflation, or people buy oil as sort of a hedge against inflation. Oil trending up, whichever way you look at it. So it's making higher lows from this 9th of September low. At the same time, bonds look like they might rise, and equities look like they might rise. And those things are hard to make sense of, because if inflation or fear of inflation is the driver, then either, if there is fear of inflation, bonds should be coming down, oil up, and equities down. If fear of inflation means fear of a rate hike cycle, or a slower cutting cycle, or rates going to flat. I'm struggling to make sense of why oil is moving up and why bonds might be moving up. So either we're going to have a period where everything goes up, all risk assets rise. That's possible, does happen, not very often, but it does happen. Or one of these things is lying, and we're going to see a resolution, and we're going to see that actually, equities are down, the VIX is going to continue to rise, oil will rise, and bonds will fall, because here comes inflation and a rate hike cycle. Or oil is the head fake, and in fact oil will drop. I don't know. But I'm looking at all of this quite carefully at the moment, because I think it's very hard to say with certainty which direction the market's going to go in. The equity market, I lean bullish, and the reason I lean bullish is because I think the 10 years about to drop, I think the VIX is about to drop, and I think the S&P and the Nasdaq are going to benefit. And Palantir is just one stock. It's not that big of a company, and it's not systematically important, but it's a high-profile stock. And to moon that much on earnings, again, I think that's a bullish sign that it can do that. Okay, before we move on to single name stocks, do we have any questions on this sort of macro level stuff? But Paloma, you've got your hand up. Is that from last time or a new question?
Yeah, it's a new question. What happens? Obviously we have no idea what the Fed is going to do, but having said that, the Fed got it wrong because it cut 50, and we've seen the bond market reaction.
Right.
What happens if the Fed cuts another 25 on Thursday, which is what the market is expecting? I'm kind of confused in terms of, should they not cut at all? And if they cut 25, what's going to happen?
Yeah, I agree. And the other thing is, of course, is there's no particular. Thursday is there's unlikely, in my opinion, to be an election outcome on Thursday, and so you can't even point to a sort of a political motive by the Fed. Now, generally speaking, I think it's reasonable to assume the Fed promotes the interests of the incumbent administration. I know it's not supposed to, but it does, and so you would say that a cut would be primarily politically motivated, I think, or market motivated, but there's absolutely no incentive one way or the other to do anything on Thursday, because nobody will know who's won. So you don't know whose favor you're trying to curry, or to what end, or what it is they want. You don't know. So I think it's a bit of a magical mystery tour, to be honest. As you say, 25 basis point cut is the expectation. I haven't
Yeah.
seen anything pop up from the Wall Street Journal to say otherwise. I think it's worth watching. What's his name? Tim Raos on Twitter on Thursday, because the one time in the last couple of years the Fed sort of panicked and did something different to what they'd messaged, he was frantically tweeting as much, 2 hours before. That was when, if you remember, they put a 75 basis point hike through. I'm going to say in mid or late 22. I can't remember exactly, but it was expected to be 50. It turned out to be 75. And basically, Tim Raos told everybody that on Twitter if you knew how to read what he was saying. So I think it's always worth watching him on a Fed day. That's his job. His job is there to message markets and calm markets down. He, has a journalist calling card, but he's really a Fed PR guy. That's his job. So I think it's worth watching that. I don't know. I mean, if they don't cut, then that can only be a signal that they're concerned about inflation. In which case, the yield's going to go up from here, and you would think equities would come down pretty quickly, because that would be a heck of an about turn from a Fed going, right, 50 basis point cut, we're on the downslope. Oh, when we said we're going to cut, we're not. And equally, if they cut 50 rather than 25, then I think people will conclude that there's something very broken with the economy, and they'll probably conclude that's not good either. So I think anything other than a 25 basis point cut is going to cause a pretty extreme reaction, I would have thought.
Yeah. So you think a 25 will kind of have no impact in the market,
Would be my guess. That would be my guess. I mean, as always, I would expect that everything will go nuts for the first, 3 hours, and then nuts in a different way for the next 2 hours, and then settle somewhere at the close. And the next day we'll get the story. But my guess is that, 25 basis points is expected. Yeah. And that alone, I would think probably wouldn't do too much, would be my guess.
Okay. Would you mind posting, because I didn't get the name and I don't use Twitter, would you mind posting the comments of this person you mentioned on Thursday?
I won't be able to. I mean, you've got to watch him live. If you want to follow him, you have to watch Twitter. I'm not on my desk that often, and I can't respond fast enough. And when he, the important one again, I can't remember when it was in 2022. If you saw it real time and you knew how to translate what he was saying, you would have whacked on a whole load of hedges right that minute, and he would have given you about an hour's notice. And I don't work to those kind of timescales, so you can't rely on me to tell you. You've got to watch him online. You've got to watch him on Twitter, and you won't find it in the Wall Street Journal proper. You'll only find the emergency stuff on Twitter.
Okay, what is his name again? Sorry.
I'll post it in Slack later on. It's Nick Timiraos, Timiraos.
Raos. Okay,
Yeah.
perfect. Thank you very much.
For these sorts of things, you have to watch Twitter, because it's the official comm channel of the Fed. It isn't supposed to be, but I mean, that's his job. That's what he does. So you have to watch it.
Okay, and he would speak as soon as the Fed comes out, right?
Yeah, and you'll see him in Fed. If you watch the Fed events, you'll see him in the front row, questioning Powell. But that's not his main job. His main job is, he will generally, his job is to signal during Fed close. I mean, it's not really his job, right? He doesn't have a CV that says this, but what he does in practice is he signals to the market when the Fed's in a close period about what it is the Fed might be thinking or taking into account. And again, the reason, the single reason to watch this guy is that emergency 75 basis point hike in 22. If you watched him, you knew it was coming, you could protect yourself. And if you didn't see it, you had no clue, and the market just dumped. And it dumped before the Fed announcement. So that's why it's worth watching.
Okay, fantastic. Super information. Thank you very much, Alex.
You're welcome. Great question, Paloma. Thanks. Richard, you're up.
Thanks, Alex. Would you mind sharing, please, from your pot of indices, for example, within your portfolio, what allocation do you kind of generally aim for between SPY, UPRO, and so on and so on.
Yeah, of course. Sorry, you asked me that in chat, Richard. I haven't answered. I'm really sorry.
No problem.
I can tell you what it is right now, sort of. Hang on. So the core position for me is TQQQ, right? That's the biggest single position, and in unit terms, I have 32 units of TQQQ. UPRO, 90 units. SPY, 20 units. And then I've got, I think you asked about SOXL as well. SOXL, 22 units. And that's in the trading account. There's some bits and pieces elsewhere as well. So I've got, I can't draw it up quickly. I can't remember the exact unit count, but I've got, I'm going to say something like 15 to 20 units of a QQQ equivalent, and about I'm going to say between 5 and 10 units of a SPY equivalent. I'll check those later for you for that. Yeah, I don't really work, to be honest, on sort of portfolio allocations like that. I probably should, but I don't. TQQQ, I just view as that's the single best risk-adjusted moneymaker I can possibly think of. Not least because you can hedge it when it's going wrong. You know, SPY and UPRO are sort of sleep at night things. You know, UPRO less easy to sleep with than SPY, so less UPRO than SPY. And SOXL, as you know, I think semiconductors are depressed and are due a move up, and so I don't mind holding a chunky SOXL position, not least because you can hedge it. So
no, that's great. That's helpful.
Yeah, my lash to the mast, don't ever want to sell it, is TQQQ.
Right. Nope, thank you. That's very helpful.
Okay. Sorry, I should have come back to your chat before.
No problem.
Okay, folks, let's move on. So let's have a look at some single name stocks. Now, the reason I want to do this, I'm going to use the shorter term charts, is because I want to see what the single name stocks are telling us about the market. I want to stay with NVIDIA, start with NVIDIA for that reason. Because, you know, with the high emotion at the moment with the election, it's easy. You know, everyone has, you know, the equivalent of pre-millennial tension. Everybody thinks it's all about to go to hell. And the reason everyone thinks that is because of all the sort of general hoopla in the media and social media, the rest of it about the election. And each side thinks the other side is going to end the world. And maybe they will, I don't know. But that feeling of tension is what leads people to worry about securities falling off a cliff. But I think if you look at the actual charts, I'm not sure they're saying that. You know, we just talked about the indices, and we talked about bonds, and we talked about the VIX. Here's NVIDIA. So NVIDIA, probably the single most important stock in the market right now. Highly strung, of course, very volatile. You know, trading on what is ostensibly a big multiple of everything. Not really, if it continues to grow, but you know that the revenue multiple is big. And so, if there was a lot of stress in the actual market, as opposed to the market in all of our heads, if there's a lot of stress in the actual market, then I think NVIDIA would be selling off because people would be taking profits, and it isn't. Again, I mean, that chart, that's the same chart as the NASDAQ and the S&P. So there's your August the 5th low, one up, two down, and it's holding over that wave one high. So that to me is not a bearish chart. And again, I think if the end of the world started tomorrow, because you know your side, whichever your side is, if the other side wins and it's the end of the world tomorrow, that doesn't look like an end of the world chart to me. That looks like a bullish chart. And so my sort of evidence pattern for where are we headed next goes, okay, I think the VIX is elevated and it's going to come down. I think that indices are holding over their August highs. That's a technically important matter. Bonds look like they're turning up and the yield looks like it's turning down. That's bullish for equities. Can't quite make sense of oil, but it's not like oil's on fire, right? It's just trending up a bit slowly, you know, in a lumpy sort of volatile manner. So I think my guess is oil's the outlier, my guess. And NVIDIA is holding up. It is not dumping. So if you were a big institutional asset manager and you thought that all hell was going to break loose in the next 2 days, wouldn't you be selling NVIDIA? I think you would. And people aren't, because if they were selling it in volume, NVIDIA will be coming down, and it isn't. Let's look at a couple of others. Let's look at Microsoft next. Same story really, which is given how much Microsoft has run up, if we just look at it in the larger degree, so from the bear market lows of 214, it's been up to 470. It's more than doubled in less than 2 years. And this is a big cap stock, super safe business. So for it to double in the space of less than 2 years, that's a big move. It's now come off its highs. It's trending sideways. We'll zoom in a bit. Sort of crappy earnings reaction. Excuse my French. But holding up okay. And again, if the world was about to end, wouldn't you be dumping Microsoft like there's no tomorrow? And again, people aren't. Let's look at Apple. Same story, right? It's just sort of holding up fine. Here's the April low. Here's the August low. Sort of sideways action really from the end of August onwards, but puts in a wave 2 low here. What's that? 0.5 retrace. Yeah. So here's the August the 5th, wave 1 up, 2 down, hot 0.5 retrace there's held up over that. Looks like it's in a wave 3 up. Not wildly bullish, but not bearish. Let's look at Intel. Intel's, I think, an interesting case. Absolutely on the floor, as you know. But let's just look at the volume profile of Intel. Start the clock. So we start the clock at the December 23 highs. It dumps down here into the 30 zone. A lot of volume here. I don't think that's selling. I think that's accumulation there. Earnings reaction is a bit of a surprise. Big volume down here in this 18 to 23 range, starting to move up. If you zoom in on Intel, I think you can make a case that says there's your low, 1848 in September, 1 up, 2 down, holds at the 0.5 retrace, maybe starting a way 3 up. So you've got a really broken company, a very, very broken company that, the legislation that is going to sustain it, the CHIPS Act, is under question. As I said in chat today, you can take CHIPS Act away, but you've got to find some other way to get money to Intel, because I don't know how else it's going to survive, and it's a national champion, so you would think it needs to survive. I think Intel's going to move up. So when I look around, struggling to find truly bearish arguments, and this could all change tomorrow, or by the end of the week maybe. And the things to watch, I think, are the 10-year yield. So if the yield moves post-Fed, when the election outcome starts to be known and people start to form a view. If the VIX is moving up, not down, this is a really important one. If people are buying puts post-event, that's unusual. Generally speaking, people buy puts pre-event, and then those puts either pay out or they expire, or people just stop buying as many of them post-event. And so you generally see a VIX collapse post-event. But if the VIX moves up after the election, that's a worry for equities. And if oil starts to spike, then again, that's a worry for equities. Right now, it looks bullish to me, and it's not, for me, predicated on who wins. I don't think the market knows who's going to win. I think the market will do what the market's going to do pretty much anyway, until some market disturbing policies actually put into practice and signed into law and goes through the House and the Senate and so on and so forth, until such time as a market moving piece of law actually happens, I think the market's going to keep moving up anyway, is my take. Right, a couple more single name stocks. So let's do Meta, which certainly is of systemic importance, and then we'll do a couple that aren't. So let's do Micron and let's do ARM. So Meta here, it's the same chart, right? It's just always the same chart. Here's the August low, August high, wave 2 down, 50% retrace holds, moves up, holding over that wave 1. All these stocks are in this sort of, and the indices are in this sideways trending range at or around that wave 1 high from back in August. They're all doing exactly the same thing, but I don't think you can say that right now any of these have a bearish look. That could change tomorrow by the end of the week, but again, we'll see. I think the VIX spike first. If something bad's going to happen, we'll see oil spike. We'll see the 10-year yield spike. Right now, these don't look bearish to me. Let's do Micron. Micron always harder to play, in my opinion. So this isn't looking as good as we could see. It's down back to that wave 2 low. So, you know, if you think, and some people do, that DRAM portends the market, and some people do use Micron as a core market predicting stock. I'm not sure that's right personally, but some people do. Then, yeah, looking a bit trickier for Micron for sure. But my own view is, I mean, I'm sure you can trade Micron reliably and effectively, but I always find it very difficult. I made money with it over the years, but never easily. So I don't know. I'm always a bit cautious of Micron generally, to be honest. But you would say that right now, that's retested that wave 2 low here. So this is your August low, moved up, came back down again, retested that August low in September. Pretty much nobody else has done that. Here's a 1 up. That's a 2 down now, holding at 50% retrace. So theoretically, we may get a wave 3 up. I would be sort of particularly bullish on that. I don't own Micron, don't plan to, except via SOXL. And then let's look at a couple more, and then we'll finish off on single names. Then we'll take some questions and we'll go to ETF. So let's look at ARM. Same chart. I mean, they're all the same chart with the exception of Micron, right? August low, 1 up, 50% retrace, moves up, holding over the wave 1 high. It's all the same chart. What else do we have? That was it. So again, everyone has, you know, emotional, financial, psychological tension in their minds right now because there's 2 big events coming up. You've got FOMC Thursday, and you've got the election tomorrow, and however long it takes to find a result. So everyone is tense, but the charts aren't tense. The charts are just going sideways, holding over recent highs. That's what all the charts are doing. So where would I look for signs of trouble? VIX first, 10-year, and oil. If VIX up, 10-year yield up, oil up, bad for equities. VIX drops, 10-year drops, oil drops, good for equities. And oil, the outlier, I would say. I think oil can go up and equities go up. VIX and the 10-year, where I would look for fast twitch reaction. Okay, let's take some more questions. Paloma, you're up.
Yeah, I'm in stop loss mode right now.
You're in what mode?
Stop loss mode.
Okay, yeah.
For single names. Because I have single names I really like and I don't want to sell them, but obviously I'm scared. So if the two that you mentioned, Meta and ARM, if you were to put a stop loss, where would you put it?
Okay, well, here's ARM. So,
yeah,
I mean, it's volatile. And so, you know, if you put losses, stop orders, you know, as you know, too close to anything, it's going to get blown out and then it reverse away from you anyway, just for market maker sport, right? If it was me, the zone I would think about would be around there probably. Because, look, if you look at Micron, Okay, what just happened here was this breakout was a head fade, came all the way back down, right, back down to the August low. And so this is an extreme version of what can happen. Right? Here's your move up. It looks like it's bottomed here. It looks like that's a wave 3 breakout. It isn't. It comes back down. It revisits that wave 2 low, and then it'll take off or it won't. If you look at ARM, you know, what is it that could happen? Well, it could happen that this wave 2 low is revisited. And if it's just touched and revisited, it could move up again for sure. But if it breaks below that, then, you know, something probably quite bad has happened. So I don't generally use stop losses, but if it was me, I'd be thinking about something with a decent gap below that wave 2. You know, so I'd be thinking about that sort of box. The reason I don't, I mean, I use them sometimes, but the reason I don't generally use them is because the problem with them is if you put them anywhere sensible, you know, everyone thinks about putting them in the same place because whatever chart method you use, it will come up with the same sort of zone. And they're just there to be shot at by market makers and taken out for fun. So if I owned ARM and I don't, I would be, you know, getting a bit stressed in the, I don't know, 110 zone. So obviously you've got to make your own decision. But if it was me, this is where my stress level would be increasing. And, you know, below 90, 96, I think, you know, got some real problems here. But again, the problem is, you know, 96 from 137, what use is it having a stop loss down there? You've already lost, you know, a quarter of the value. So.
Yeah. And Meta?
Do you want Meta? But it's a bit easier, this one, I think, because I think what you could say is that, well, look, if it drops below that wave 1 high, then probably something bad's happening. So, you know, if you put a stop loss at 543, it's definitely going to get blown out, just because I'm superstitious about these things. But if you put it a bit below the wave 1 high, then again, tells you that you're not in a wave 3, something else is happening. You haven't got a breakout on the way. We have 560 to 524. So I don't know. Again, if it was me, my stress level would start at about 542, 543, and my stress level would increase on the way down here. So if it was me, I'd be thinking about a stop somewhere in this sort of area personally. Just I think about below that wave 1 high. But if you place them too close to it, it's the obvious place to put a stop, and so it's going to get taken out and then reversed upwards.
Yeah. Okay, I hear you. I'll put them before the elections tomorrow, but I'll put them lower. Yeah, I'll put them lower. Yeah.
my approach to risk, by the way, I you saw it in disclosures last week. I just sold all the poorer quality stocks that I own, with the exception of Matterport, which is got an acquisition by CoStar pending. I'm a bit underwater on that, and I don't mind owning CoStar stock, assuming the deals goes through. I don't have a big position anyway, but apart from that, I pretty much sold all the dross, trimmed some big cap stuff, have higher cash allocation, lower margin draw than normal, but nothing crazy. And, you know, I figure, well, if something bad happens, the dross will fall off a cliff. I've got rid of all that. The big stuff will come down more slowly, and I've got time to see it and to hedge or take profits or whatever I want to do. So we'll see. What I would expect is a lot of crazy swinging around and stuff while the result is not known, and I don't even think any of that will be commentary on likely actual government policy. I think that's just, you know, market makers swinging at people's stops for fun. I would expect a bit of craziness personally.
Okay, thank you very much, Alex.
Great questions, Paloma, as always. Thank you. Richard, you on?
No, apologies. That might be I didn't take it off.
Okay, no worries. All right, great. Okay, let's do some ETFs. I want to look at only two. I want to look at semiconductor. I want to look at energy. So let's look at SOXX. So this again, and we've seen the same chart all day today on this webinar, which is you know, an up or down, sideways. Semiconductor's been quite weak, despite, you know, really good. There was one bad earnings print, ASML, and everyone else has put in great earnings. TSMC, really good earnings. Lam Research, LRCX, really good earnings. Cadence, CDNS, really good earnings. Intel, dreadful, but that's a separate case. So in general, fundamentals in semiconductors look really good, and the chart's weak. So again, one of those is lying. Either semiconductor is under accumulation on the basis of fear in the sector, and it's going to move up. That's my bet. Or the sector's topped. It topped earlier in the year. You know, there is something of a bear market developing in tech, and semiconductors is going to be the first to get hit, and it's only just started. Right, those are your two alternatives. Lean bullish myself, but you know, could be wrong. Let's look at energy. Now, energy, I think, is under accumulation, and I don't even think you can call this a Trump trade or whatever you want to say, because now, when I looked earlier today, oil stocks are up, solar stocks are up, and you wouldn't call solar stocks a GOP trade. I think that energy in general is under accumulation. I think the reason it's under accumulation is that energy usage is going to go up a lot. You've got all the big data center companies saying, well, we need whole new power stations to supply the need for AI compute. So I think whatever the source of energy, be it fossil fuel, solar, whatever, fundamental demand for energy up, and therefore I would expect stocks to follow suit. XLE, which is the sector ETF, as you know, needs to break 93 to break out. It's hinted at a couple of times here in September 23. It did break out in April 24, but came back down again. It briefly tried it earlier in October, broke down again. But I like energy and long. All of the stocks in the Inner Circle Energy Model portfolio. I'm long ERX, which is the 2 times levered version of XLE, and I think it can do well. I think you need to be patient. So you could argue, I suppose, that if energy is going to move up, tech is going to move down. I'm not sure that's right at the moment. I think both can move up, because I think it's the boom in technology consumption, meaning data center consumption, compute cycles, memory usage, all of that. That's what's driving the power demand. That's what's driving energy stocks, I believe, to be under accumulation. So I think slightly strange situation at the moment, where oftentimes you will see if tech up, energy down, and vice versa. Not sure that's the case at the moment. So I don't think any of these are political party trades. There's a lot of talk about that on FinTwit. I think it's nonsense personally. Again, no one knows who's going to win. It's too close to call. And beyond that, nobody knows what legislation will actually pass, because any particularly extreme legislation on either side is likely to get shot down in committee and so forth. So I think I don't think you can say, well, if X happens, I want to be long energy. If Y happens, I want to be long tech. I think it's far too simple. I think you have to look at each sector and each stock chart as its own closed system and make your decisions on that. I think it's a much more reliable way to invest and trade than try and second guess, well, what might the political outcome be? And based on what I think that outcome might be, what's going to happen to stocks? I think that's an impossible game, personally. That's just betting. That's not investing. So energy, I think, continues to be under accumulation, and semiconductor, I also think, continues to be under accumulation. Here's SOXX on a longer time frame. This is on the weekly, going back to the COVID lows, and just look at its behavior so far. So one up into the bull market highs at 21, bear market low 22, high so far July, drop back into could be a wave 4 lower. Failing is still on the wave 3 up, but again, let's be cautious, and let's say that's a wave 4 down, holds over that wave 1 high. And so I think one could be caught, with reasonable caution, say SOXX can make it to 300 and the current 220. And in fact, it could be much more bullish than that, making it up to 300 or so for a 1.618 wave 3 high, if this is still a wave 3, and then a reset, and then a wave 5 higher. Personally bullish on both. So I find myself, on the one hand, I'm not an American citizen, I don't live in the US, I can't vote in the election. I'm not as wound up and as tense as I would be if I was all of those things. But nonetheless, as an investor in the market, one feels the tension. But if I look at the charts before me, they aren't tense charts in my view. So my own view is, you've got two big events this week: the election, FOMC. The outcome of the FOMC will be known, I suspect, before the election is determined. And as always, best to watch price develop and react accordingly. I don't think some caution and some prudence is a bad idea. Personally, I've lightened up a little bit, not massively, but a little bit. And I'm ready to be flat wrong on these things and reach for the, sell and hedge buttons, no problem. I don't feel religiously wedded to a thesis. I just look at the charts in front of me, which I think at the moment look bullish for equities, but if they change, then, I'll flag that loud and clear if it's changed my opinion. And any trades placed, as always, I'll disclose them before they're placed in covered instruments. That's all I've got for today. If you have any more questions or comments or anything at all, like anything we covered or anything in the market or anything really? If not, then let me just check.
Alex?
Yeah, hey.
Alex, sorry. I've been looking at because obviously I'm following all the story about the energy companies and the tech companies, blah blah blah, and I own XLE and I own XLK, so I'm fine with that. But hand in hand, I think that XLE would go very well, and I've been doing some research on this with an ETF that I found, which is nuclear and uranium ETF from VanEck.
What's the ticker below?
Oh shit! Hold on, I have to look at it. 1 second. 1 second. Let's see if I find it here. It's US.
Yeah.
921 89.
Okay, hang on. TradingView won't find that. Is it a Europe listed one or a US listed one?
No, it's US listed.
Okay. You don't happen to know the alphabetical ticker, do you?
I know, but this is a US ISIN, so.
Okay. No, I know, but TradingView can't find it. Hang on. So what's it called? VanEck?
VanEck uranium and nuclear. VanEck nuclear and uranium.
Okay, got it. Hold on.
It's fantastic. It has
NLR.
It has. Sorry.
I think it might be NLR. Hold on.
Yes, that's it. That's it.
Here we go. That's good, isn't it?
That's it. That's the one.
Yeah, that looks nice.
It has all the right names inside. I mean, it has Constellation Energy, it has NewScale, it has Oklo, it has Vistra. I mean, it has, and then it has uranium stocks, miners. And I'm thinking very seriously and in putting some cash into this ETF. I think if we're going for all this consumption from the tech companies, we saw what happened with Microsoft and the 3 Mile whatever, I can't remember the name.
Amazon.
I think it's a great ETF. And I mean, it's big. Big. It has 500 million assets under management. It's 30 basis points commission, and for me it feels right. I mean, yeah, it's fallen a bit now, but
I'll tell you what I think. I think this. My own systematic error on this stuff is, I tend to assume that. Well, surely this trend is over, right? And I'm not saying this is correct. I'm saying this is where I tend to err. My error goes like this, and it happens in markets where I'm particularly knowledgeable. So I tend to go, well, surely everybody knows about this idea now, whatever the idea might have to be. And therefore, surely anyone who wants to buy in has bought in. And now people are just selling to, rubes basically. But that's usually wrong. Usually these trends run a lot longer than I expect them to. And so if you look at this one, for instance, I mean, I think you could argue that that's just one giant wave one up from the COVID lows, because it hasn't really corrected much, has it? Right, it's dropped. It's put a 38.2 in. That's not much. Let's say that's a 2 low. Could be a 3 up, 200%. So I don't know. I'm very conscious of that. As I say, I try and learn from all my systematic errors, because I have a small number of ones that I commit reliably. And chief amongst them is assuming a trend is done when it's actually early. And that tends to happen again in markets I know about. So because obviously data center and energy to an extent and nuclear to an extent are sort of my wheelhouse, I tend to think, oh man, this is old news. Everyone knows this. Everyone's bought this. Who doesn't know that nuclear is back in vogue? Seriously, I mean, you could have made a killing in 2021 from nuclear stocks. I mean, everybody knows this, but the truth is, people don't. So I don't know, but I suspect you could be right, and this one could be on the start of a long trend. I would guess there'd be some volatility along the way, but it does look like nuclear is coming back into the public consciousness as an acceptable thing. I think that people are sort of realizing that, renewable solutions can't generate enough baseload fast enough. I think the German reversal out of nuclear is going to prove to be a dumb idea that's going to have to get reversed. I think you could run that. Yeah. Technically, I think you could say that's stretched. It's hit a way through already. But on the other hand, you'd say, well, it hasn't really corrected at all. So that's just an only up stock from the COVID low. So yeah, I see the appeal.
Okay. I'll just mention it on the chat just for people
for sure.
to be aware about it. Okay.
Yeah,
okay.
For sure.
Thank you, Alex. Thank you very much.
Thanks again, Flavio, as always. Klaus, I think you had a question. I mean, Klaus has got. You still up, Klaus? No. Okay. All right, folks. Anything else you want to talk about before we finish up? If not, then we'll shut down for the day. Recording will be live in a couple of hours, as always. Again, I would expect some absolute craziness over the next 48 hours of the market. The initial period, I think, will be just craziness for its own sake. It's there to spook people to the upside and the downside. FOMC, there'll be some craziness as well. So my guess is that as the week draws to a close, there'll be some clarity over who's won the election, maybe, and some clarity as to market direction, would be my guess. But in the meantime, I think we're just going to see craziness. So good luck to everybody. I'll post the recording shortly. Thanks again, and talk to you all soon in chat.